Good now, if that's okay. Good
Mhm.
morning, everyone. Welcome to Kennore's Business Growth webinar series. And this is our financial planning webinar series with Anya Cullen from Ask Paul. So you're all very welcome this morning. Our hosts are Tom Francis, Head of Accounting and Small Business at Kennore. Tom oversees a team of accountants who work closely with high potential startups and SMEs, providing expert business advice and guidance and ensuring their statutory requirements are taken care of. And Anya joins us from Ask Paul and Fairstone, Ireland. She has over 15 years of financial industry experience. Anya holds a certified financial planner and qualified financial advisory certification and has a great passion for assisting people on their financial journey. And just a little bit about Kennore. We're a firm of over 75 staff specializing in offering compliance and business support services, outsourced bookkeeping, payroll, management accounts, and compliance. We're a multi-award winning online accountancy and company secretarial firm supporting clients across Ireland, Northern Ireland, and the UK. So it's important to note that this webinar is for general information purposes only. For specific advice, we always recommend reaching out directly to an expert, and we'll share ours and Anya's contact details at the end. That being said, Anya and Tom are here and happy to take questions, and we'd love to see interaction from you throughout. So please use the chat or Q&A feature, and I'll pose your questions to them on your behalf. So I'll now hand over to Anya to introduce Ask Paul and Fairstone, Ireland. Thanks, Anya.
Good morning, everybody, and welcome to, share. Can everybody see my screen there now for the Money Masterclass?
Yes, we can.
Fantastic. Thanks, Christina. Good morning, everybody, and you are very welcome to join us this morning. My name is Anya Cullen. I'm one of the senior financial planners with Ask Paul and Fairstone, and I'm just kind of going to take you through high level what financial planning should look like for business owners, and in partnership with Kennore, with their expert financial kind of accountancy side on small and medium businesses. So, as Christina kindly said, I'm working in the industry over 15 years. I'm 4 years with Ask Paul and have experience both in the traditional banks and brokerage model, giving financial planning. So it's really important as small business owners that when you are looking for financial advice, that you build a relationship, and you find that kind of trust with who it is that you are looking to work with over the long term. So just to give you a little bit of a flavour of who Ask Paul and Fairstone are, many of you will be familiar with us. Our CEO is Paul Merriman. He would do a lot of free financial advice, both on the TV, but also across all the different media channels and our own website here. So at the moment, we are responsible for looking after over 475 million euro of people's savings, investments, pensions, in assets under management. In terms of the number of clients that we have assisted, we have over 14,000 clients now that we would work with on a day-to-day, month-to-month and year-to-year basis. But we are far bigger than that in terms of we are trying to bring financial planning to everybody. So taking away that financial barrier. So if you are on social media, we have over 116,000 followers on Instagram. And this was really where the business grew initially. We first, as Ask Paul, started on Instagram back in 2016 and have gradually grown up over 116,000 followers. I'm very proud of the blue verified tick. Again, TikTok, again, we have over 82,000 followers, and there's over 23,000 hours of YouTube videos and hours that have been watched. So wherever you try and get your information, we have loads of financial resources, and we save webinars. They're also available on our website, and we'll also discuss the importance of budgeting. We have a really user-friendly budget template, whether on a business or personal financial journey. You need to know where your money is, because financial well-being is really important. So if we go on and I just go, what is financial well-being? So many of you on today, some of you will be limited company directors, some of you will be sole traders, you're in a partnership. There's a quiz there or a poll just to see kind of where you are and what stage are you at in your financial planning. Some of you will be married, some of you will have children, some of you will be cohabiting, some will be renting, some will be with mortgages. You're all going to have a different financial journey. So what financial well-being is, it's actually very much centered as your overall well-being. So whether this is kind of as part of your sole trader or your business, it actually should receive the same as your physical and mental health. So here in Ask Paul, we use the Consumer Financial Protection Bureau in the US, and they have developed a definition of what financial well-being should be. So with this, I'm going to break it down into each one of these slides, but on both sides, it's really important from a business perspective, but also a business perspective, that you have control over the day-to-day and month-to-month finances, okay? You have the capacity to absorb a financial shock, and you are on track to meet your financial goals. The biggest and most important part of this statement is you have the financial freedom to make the choices that allow you enjoy your life. So we all get up every day, we go to work, we earn a living. Nowhere in this statement does it say you should have a loan, you should have a mortgage. What about taxes? What about pensions? If we break this down and we say you have control of your day-to-day and month-to-month finances, this is that you can get to payday and you can pay your salaries, or you can pay yourself. You have some money left over in the bank account at the end of the month, and that you know that kind of where you are in terms of money in versus money out, what your cash flow is. The capacity to absorb a financial shock, this could be in terms of somebody going out sick, a contract not coming through, but also in terms of something breaks, something needs to be replaced. It's that there should be enough money there that you're not reaching for credit or you're not going into debt straight away. And there's various different levels of debt that we'll discuss in terms of if there is an emergency fund or you have money left in your account, you're not straight away reaching for a credit card, which is one of the most expensive forms of debt, or go looking at loans, and you're on track to meet your financial goals. So what are financial goals? So day to day, I will have people come into me and they're looking at wealth extraction from their business. They're looking at family business succession. How do we get it down to our kind of the next generation? I have people who want to get in the property ladder, but they're only after starting out as a sole trader, or they're only a few years as a limited company, and they're trying to get on the property ladder. So what do they need to do? So that's a really important financial goal. People with young children, education, people with, there's a lot of legislative changes at the moment in terms of how can you extract wealth and use it in terms of retirement planning, because all of these things are guiding you towards financial freedom. So this is to make you allow and enjoy your life. So if 90% of it is going towards the day-to-day, but there's 10% that you can look to see, well, what can I do to enjoy my life, to grow my business, and to get out at a time when I'm ready? Because again, retirement is nothing to do with age, it's to do with the amount of money you have in the pot to maintain your lifestyle. So in terms of this looks like a really nice kitchen, but for most people, they don't have an ATM in your kitchen, okay? As a small business owner, as a sole trader, you are your ATM. You are the person that is generating the income, that is filling this every single week or every single month. But like all machinery, like all kind of engines, it can break down over time. So it's really important that you actually have a protection mechanism in place, that if that ATM in your kitchen breaks down and it stops spitting out money, that the company can manage to keep going. So what I'm going to do, hopefully most of you have a mobile phone, or maybe you have a calculator. But if you can take that out and put in what is the net amount that you pay yourself every week or every month. So just open up the calculator app on your phone and put in what your average salary is. So in terms of, for most people, if you're earning, and again, this will difference between kind of tax rates, whether you're trying to keep yourself on the lower rate, which is 20%, or the higher rate. But let's use an average 3,000 euros per month. Okay. If I multiply that by 12, net that is going to flow through my bank account is 36,000 euros per annum. I'm 35, the goal is to retire at 65. I have 30 years. That ATM in my kitchen is going to have over €1 million go through it. If I called out to your home this afternoon and put an ATM with over €1 million in it, but I said there is a possibility this might break down or it might need to be repaired at some stage in the future, would you insure it? Because you are responsible for generating your own income. And one of the most important things that you can do is your income is your biggest asset over time, is protect that. Okay. So when we're looking at how do you protect it, your income is going to pay your mortgage, it's going to pay the wages for all your staff, it's going to have that lifestyle that we talked about in terms of financial well-being, the really nice, the holidays, the hobbies, being able to do everything. So depending on what age you are, okay, what we have here is the financial wheel of life. Now, some of you may have seen this before, but what it is, it's like a clock. So we start up here at 12, and what we'd want to do is we want to work around in terms of the different financial items that are important. But what we'll see is over here, our pension is at 10 a.m. We've a lot to get through before we actually get there. The most important bit is actually understanding what a budget is, understanding our cash flow every month, and making sure we can get to payday and still have money there, because then we have a positive financial budget. If we can't get to payday, or we have nothing in terms of an emergency fund, what we would say is the absolute minimum you need as an emergency fund is €1,000 in cash that you have full access to. Self-employed people, you are not, especially if you're on the SPRSI contribution, you don't qualify for the state disability benefit straight away. It may take up to a year to get payment. So you possibly need minimum 3 to 6 months of cash flow in your business account or in your personal account, could be in a credit union account, somewhere that's easily accessible. But it's really important in terms of being able to not reach for debt, have cash to cover that.
Indeed.
On a scale.
Yeah. Anya, so I just find this fascinating, actually, the wheel of life. And what I was you mentioned there, the point about business owners and the point about building wealth and extracting wealth and everything like that, which is obviously where the wheel plays in. I'd often meet business owners, and I suppose they want to build the wealth in their own companies, businesses, but sometimes it can be to their own personal detriment, really. Like they might overwork themselves, for example, and it could play into the whole the whole mental health piece you talked about earlier. But also then the ATM in the kitchen piece can dry up a lot when you set up a business, because in the earlier stages we found like business owners, they might not take a salary at all, might not take nothing, because they don't want to put the business under pressure. They might have enough personal funds to see them over that hump. But ultimately, there's something there, I think, isn't there, to be careful of. Like, you want to build a business to generate the wealth, but there's a massive sacrifice there, be it the financial health, and everything else that comes with that. Yeah.
So what we would find is, particularly with people who are only starting out, maybe in their first 2, 3, 4 years, they're trying to understand kind of the requirements of the business, the revenue requirements, the deadlines that are imposed in them. Also the kind of the preliminary tax that you think you've just got through this year, but now you're looking at next year. And this is where we'd see quite a lot of business debt potentially build up, and that cycle in terms of paying your revenue bill this year, but taking the 10 months to clear the loan just to be back to that same point this time next year again. So the budget and cash flow modeling is really important in terms of understanding that, but it's also understanding in terms of cash flow that I've no problem with kind of businesses when they're starting off that they don't have kind of a lot of profit, so they're not paying themselves. But this is where it's really important as well, if there's anybody on here kind of considering going out on their own, that maybe you can reduce your hours in your existing job, build up your business, that there is still that kind of cash flow coming in, because life is expensive, okay? And if we look at this kind of wheel of life and you're talking about debt, I've had debt, we've all had debt on here, be it a car loan, be it a personal loan, be it that some people take loans out for holidays, but it's understanding the level of interest that you're paying back on that. And good debt, which is a mortgage, it's a home, versus bad debt, again, in terms of where you're at. But business owners, particularly if you are in a limited company structure, there's really good protection policies, whether you're a shareholder, whether you're a co-director, but even as a sole trader, you can use tax relief to be able to protect you, your business, and your family. And I'll have a look at that. But it's also understanding kind of savings and investments, that there's a lot of companies doing really, really well at the moment, and a lot of cash sitting on balance sheets that, again, there may be surcharges because you've got large cash deposits on it, but should the business be looking at investments? Because we know traditionally year on year, over a kind of a 10, 15, 20-year period, equities, which are shares in businesses, will outperform bonds, and bonds outperform cash. So it may not be the best home for your business to have everything sitting on cash. I've mentioned mortgages and I will come back to them again, but anyone who's a first-time buyer or anyone who's looking to trade up, it's really important to actually work closely with your accountant to have your accounts in order, but also to be able to show that the business is actually viable enough to be able to prove to a bank that if you draw down a mortgage for 30 or 35 years, that the bank can see the repayment capacity that's there. And then we get over to pensions, because very often, if you don't have these first segments looked after, well, what's the point if I'm 30 today looking after 65-year-old me? I need to build the business up. And this is why, in terms of pension tax reliefs for business owners, they get much bigger and much greater the closer you get to retirement. And it's also understanding your tax. So even from an expenses point of view, what can you actually put against the business to reduce your tax in terms of where you are? And the next slide of this is the wheel of life. It's a little video here that will play in terms of, depending on where you are in life. So if you're only starting out in your business, you actually might have a lot of debt. You may not have an emergency fund or that much in savings, but that's okay, because over time, we can get you there. By the time you're getting to kind of your exit strategy, you're retiring, we need to look at, have we enough then in terms of savings investments? Are we carrying a mortgage in? Because most mortgages that are being given out nowadays are up to age 70. State pension is 66. We don't want to be carrying €1,000 a month into retirement and only have a state pension, which is a little over €1,400 a month. So it's about different stages of the timeline, but being very aware that by the time we get to kind of retirement, ideally, if we can have these pieces of the pie at 10 or be working towards getting a 10, that's the goal from a financial planning point of view. So again, in terms of, we look at the difference. Sorry, does anyone have any questions? Hold on, let me just pause here for a sec. Does anybody have anything before I kind of move to the next stage?
We haven't had any questions submitted from any of the attendees just yet, Anya, no.
Great. So in terms of, just before I kind of get into the bit that everybody loves, the wealth instruction and everything, again, it's about sitting down, just having a financial plan and getting help if you need that to actually understand where is the business today, and have I got an emergency fund in place, or is that the first place that we actually should be looking at? Because if we look, and I go back to that ATM, we want to make sure that there's always money coming in, that cash flow is not going to be interrupted. So a financial plan should actually, there should be another one here. We should review what you already have in place. Make sure you understand what you have. You don't build a house from the ceiling up, you build it from the foundations up. So the foundations are, how do we protect your income streams and make sure that they long term, they're stable? Once we've that done, how do we grow the wealth of the business over time, looking at savings and investments? And then how do we get you out at a time that you're ready to either dispose of the business, liquidate it, sell it, or pass it on? And make sure you've enough money to replace the income you've become accustomed to. So there's been loads going on in the markets over the last while. But what I want to show you is the current S&P 500. Okay, so this is the most quoted stock market. It's Standard & Poor's that's listed on the New York Stock Exchange. And these are the returns over the last 5 years. Believe it or believe it not, COVID is very quickly going to drop off these returns in terms of where it's at. But when I mentioned that equities outperform bonds and bonds outperform cash over the long term, equities are just shares in companies. In this scenario, there's 500 different companies, okay? Markets will go up, and I can guarantee you markets will go down. We don't always know what will be the cause of a market crash, but they will recover and they are cyclical. Up here, if we look at the beginning of 2022, Russia invaded Ukraine. The bigger knock-on effect in the markets was not the actual war, it was the oil and the energy sanctions imposed on Russia that caused the greater decline. Things stabilized off during the summer, but by the end of 2022, and this is one of the big things as business owners you need to be aware of, inflation in the Eurozone hit 10%. The European Central Bank started increasing mortgage rates. Again, that's all going to affect your business. It's going to affect the supply and demand of materials. But what happened with the market? It still goes up. Come back here. This is as of today. I only updated it this morning. But there was a US general election a couple of weeks ago, and we have a new president. There was a lot of negativity about both candidates, about what will happen to markets if they get in. There's been a very positive effect on the markets since President-elect Donald Trump got in. Is that going to maintain and kind of be the same for the next 4 years? We don't know. Hindsight is great looking back. But the thing is, if you are not forward looking, and if you are not considering looking at alternatives to leaving your money on deposit, well, then the business is not going to do as well as it potentially could over time. So one of the things that I'd like to show you is this is one of the funds that we use in Ask Paul quite a lot. It is on the higher risk profile in terms of there are more equities and companies. I hope you can see it clearly, but up here there's over 690 companies within this fund. So it's actually more diversified than the S&P 500. You're not only in 500 companies, you're in 690. You're not only in the US market, you're in a global market. In terms of money, because I get this a lot in terms of, is my money safe in a pension? Well, potentially you need 690 companies to go wallop at the same time for all of your money to disappear. Everyone has stories, but we need to be mindful of where was the money invested if there is historical stories, oh, such and such lost all their money in a pension. We will only give advice on authorised and regulated investment funds, okay? But what we need to do is have a goal for your money. So what is that? And I've just put up the main ones that I would see in terms of retiring early is huge for business owners, but it's not necessarily completely stopping working. It's that I love what I do, but I don't necessarily want to do the 5 or the 6 days anymore. I'd love to cut it back to 3 days. That's a really good financial goal. In terms of kind of building your own wealth and extracting wealth, well, can we look at that? And I'd love to ask kind of if there are any questions here, be it on kind of your mortgages, on savings, investments, pensions. If it is about even kind of myself and Tom are more than happy to kind of talk about the accounting side and business expenses, how we really get your business from a startup and build it up over time. Even if you're a sole trader today, when's a good time to actually consider moving up to a limited company and getting the benefits? And for anybody who would like to look at their personal situation, which Christina mentioned at the start, if you use Knorr when you go onto the Ask Paul website, you will get a free business owners consultation. They are usually between €250 up. It is free for anyone on the webinar this morning. Or if maybe you just don't want to ask a question here, my email address, my name is Anya Cullen. It's anya.cullen@fairstone.ie. Please reach out. I'm more than happy to go through any questions with you.
Thanks, Anya. I was just thinking as you were speaking a bit there, like fantastic insights. And I'm always thinking like, okay, so what's the tax angle on this? You know, like, let's say I have my business set up and it's, you know, it's going reasonably well. It might be early to mid stage, you know, but I can see there's good prospects there. Why should, you know, we talk about protecting our income, the pensions and all that sort of stuff. And often our clients would say like, yeah, but you know, they're not thinking of, as you said, they're not thinking of 65-year-old me. They're thinking of right here, right now, what I don't need. And I'd often like think about pensions, for example, and I'd be thinking, yeah, you don't need to put, you know, huge vast sums of cash into pensions right now. You could potentially, but you know, it's okay to start low, isn't it? And kind of build things up as well.
100%. And I would say to anybody that pensions are one of the things that get put in the back foot, but the back foot isn't just a week or a month. It's amazing how quickly a year, 3 years, 5 years happens. But if you're in your 20s and you start kind of investing, and it is investing €100 a month or €100 a week into your pension, that will compound over time. But the other great thing is if you're a sole trader, the older you get, the more revenue will allow you put into your pension and get tax relief on it. So just to give you an example, if you are earning under €40,000 a year, and this will jump to €42,000 a year from the 1st of January, you get a 20% return. That's tax relief on any personal contribution that a sole trader puts into their pension. There's absolutely no investment that I can guarantee 20% return every single month. But then it's invested and you say, okay, 690 companies, that fund that I showed you is around over 35 years. It's averaging over 10% return per annum over 35 years. It's actually done over 11% return over 35 years. Some years will be up, some years will be down, okay? But if you start in your 20s or your early 30s and we have 35 years of compounding, tax relief and investment returns, where did Warren Buffett make all his money? He started investing at 11. He's now 96 and he's still investing and he's now considering retiring. But the thing is, the earlier you start, and that's the key, just start at whatever you can afford. It'll compound, and then there's loads of nice things you can put a lump sum in every time you talk to Francis or you talk to the team in Knorr and they say you owe revenue 5 grand this year, you owe revenue 10 grand this year. You can put a lump sum into your pension to offset that. So you can have a very small monthly premium, or you can do annual lump sums. But again, if we kind of look at how do we get the best return for everybody, euro cost averaging, or if you follow online, dollar cost averaging, if we're putting a little bit in every single month, we're buying 12 times a year, as opposed to if you only reach out to your accountant once a year, you're only buying the market in October every year.
Yeah. And that's a fair point. That happens a lot with our sole trader clients,
Mm.
actually, where they do the lump sum in October, and you probably have seen a lot of that over the last couple of weeks. For company owners, then, like the company can contribute to a pension scheme for the director, and for that to be tax deductible, like that's gold, isn't it?
It's absolutely gold, and it is a very generous calculation. And let's just say you set up your business back in 2015, but you've been growing the business for the last 10 years. You haven't been able to kind of think of pensions or pension funding for yourself. If you're in a limited company structure and you are a director, you can backdate pension contributions since the company was incorporated. You also don't have to take anything out of your own net pay. The company can pay in money in terms of a director's pension. The other thing that I'd like to bring up this morning as well, because many of you will be aware of the responsibility of auto enrolment coming, please God, in 2025. It has been pushed back. It's not going to be until the end of September 2025 now. But if you're a sole trader or you are a limited company director, you are far better off in a personal kind of or a company pension plan than you will be in the auto enrolment government scheme. It'll be a lot more flexible in terms of contributions for one. You will have a lot more choice in terms of where you can put your money in. And you will also, which is the big kind of selling point in terms of retirement age, it will not be a designated 66 before you have access to those funds. We have directors getting out and accessing their pensions as early as 50.
Oh, okay.
Yeah.
That's amazing. And yeah, so as far as we know, that's the auto enrollment is coming in September, and it might be more applicable like to the employees rather than the director. But at the same time, your point is well made. You mentioned there about backdating the pension contributions to the date of incorporation. Like, so from the point of view of the tax deductibility, tax write-off, do the contribution is like can the contributions be made, like, okay, they can be made in the year, right? So let's say we're in 2024, I'm making a contribution, let's say of 20,000, 50,000, I suppose the number is not so material, just that it's a lump sum, let's say, right? So if I make a lump sum contribution the year, then there's no limit, is there, like in terms of the
So
tax point of view?
this is kind of where we've been very busy over the last while. So right now, if you look at what's called a PRSA, a personal retirement savings account, they changed the rules last year in Finance Act 2022. And if you had 2 million sitting in your bank account, you could transfer the full 2 million into a PRSA and be max funded in terms of the standard fund threshold as a director. So the company, number one, needed to have that much money sitting in its business account, which, believe it or not, there are plenty of companies out there that do have that. But they are very quickly closing that door. So as I'm from the budget just gone by in September, as soon as the new Finance Act 2024 is published, that is going to be limited to 100% of your annual salary. So if I only pay myself 20,000 euros, I will only be allowed as an employer max fund my pension to 20,000 in a PRSA. If I'm on 100,000, I can put 100,000 in. But if you go back to the traditional company pension plan, you as a director, you can also open this up to your employees, which is a really good retention benefit, because we are seeing that it's harder and harder to recruit and also retain good employees. So if you are looking at that, you can offer various different benefits, such as income protection, such as death and service benefit, and you can put an employer contribution into your pension. But that's the one, the company pension plan, whereby you're a limited company, you've done nothing for the last 10 years. I am only paying myself 20 or 30,000. So the big kind of PRSA isn't going to be as beneficial anymore. But we can do what's called a max funding quote, whereby you could still be able to put in 200 or 300,000 based on if you're married or single, how long the business has been running, and what your salary is.
Okay, that's very interesting. Yeah. So
do you have a date on you that, sorry, Tom, to have interrupted you, do you have a date on you that you know that's going to return to be limited?
So the 1st of January 2025, for
Okay.
definite, but there's still a question mark as to if it's when the new finance budget is actually published. So there's a couple of things kind of going through, but the 1st of January, for anyone who does have kind of cash deposits sitting in their bank account and would like to get it into their own name, please reach out, because time
Yeah.
is running out in terms of being able to do that.
Time is definitely running out, like, and I suppose the key point is to get it into 2024, you'd have to actually physically make the payment, wouldn't you? Like, you
Yeah,
can't.
and don't
Yeah.
forget, Christmas is falling funny this year. An awful lot
Yeah.
of businesses and life companies will be closed by Friday, the 20th of December.
Okay.
So traditionally, we'd kind of say, look, you have up to the 31st of December. Again, you're going to push it very, very tight, because a lot of the life companies are going to be closed for Christmas week. You're not going to get the kind of the money in. So I'd be saying kind of Christmas week, you need it in by the 20th of December if that's something that you're considering doing.
Okay. So think about over the next 3 or 4 weeks. If I
Yeah.
have some spare cash that I want to use tax efficiently, I suppose, reach out, because getting it could be a pension. It doesn't need to be hundreds of thousands, but every little helps at the same time. But it could be hundreds of thousands,
It could
depending
be
on the
hundreds of
situation.
thousands.
But the key point is, like, because this is a question I got asked in a recent webinar I hosted, was, oh, can the company contribute to pension if I don't take a salary? And you've actually answered that question now, because what's happened in 2025 is, like, the pension contribution kind of matches the salary. So
Yeah.
that's that loophole almost closed now at this stage as well.
Now, company pension plan, you'd still be able to kind of pay yourself a minimal amount and still be able to access the employer contribution. So this is where kind of
Okay,
proper
right,
financial advice is really important.
right, yeah, okay,
Okay. And the other thing that I'd like to kind of come back to while we're talking about tax relief is in terms of your income and protecting that. Okay. So we don't know, in terms of the kind of crystal ball of life, when an accident, an illness, or an injury may happen. Okay. If you don't have income protection in place, and it isn't available to all occupations, particularly kind of some of the more construction, the kind of more heavy manual or heavy driving occupations, but income protection will protect up to 75% of your salary plus your pension contributions if you are unable to work because of an accident, illness, or injury. One of the biggest reasons people go out of work is stress and anxiety. You will see that an awful lot, because you are everything to everyone. You don't want to turn down contracts. You may be taking on too much and they're trying to kind of get everything through. But the most important of anything that you do is you protect your biggest asset, which is the income stream coming through. Because if I'm even in a partnership, but my expertise area is over here, my partner's expertise area is over here, I go out, it's not a given that whoever you're in business with can do your end of the business. Whereas an income protection policy will pay the business 75% of my earnings. I can be paid out of that, or more importantly, the company has enough money to employ somebody until I get better and come back and we haven't lost contracts. So it works both ways. It is protecting you and your health, but it's also protecting the viability of your business.
yeah, that's a really
So
important one. Yeah, and I don't think, I think it's a rare one now to see that. Very rare, I think, in terms of what I see from our own client base, and when we're working through their accounts. So that's something that, particularly, say, where, well, it could be as crucial actually in a sole directorship, or sole trade, where
Massively.
it's just themselves, like, and if they're not there, nothing happens.
No, but how do you pay your mortgage? How do you
Yeah,
put food on the table? How do you keep like, we're coming into a really cold snap. How do you have enough money just to make sure the heat is on at home? So it's crucial that when we're looking at financial planning, you have a really strong foundation, because that makes you really financially resilient. Financial resilience means, well, even if something that I wasn't expecting happens, I'm good. And unfortunately, most of us will know somebody that's either passed away prematurely, that's been diagnosed with an illness. No one expects it, and we're all healthy until that happens. So in terms of just maintaining that bulletproof persona, income protection, corporate kind of your director's insurance, and it's very cheap and it's tax deductible because it's a business expense.
It's a no-brainer
Yeah.
in that regard,
Yeah.
you know.
Yeah.
And I suppose to pull away from that a little bit then, we talked earlier about, you know, overall financial well-being. And I know from when I speak with my own clients, you know, there's a bit of education going on there sometimes as well about cash flow.
Yeah.
You know, you often hear people say, you know, cash is king or cash flow is king because it's money in the bank. You can have a profitable business. You can actually have a profitable business with no money in the bank. You know, because you might have, for example, agreed far out payment terms with your customers, but you're paying things like your wages up front, you're paying your suppliers up front, and they're the terms of business. But alternatively, you can have the opposite scenario where, say, your business has money in the bank, loads of money in the bank, but it's not making any money. It's loss making. And that can happen in situations where, like, the company might collect upfront from its customers, but pushes out payment terms for its suppliers.
Yeah.
So it might run into problems later, you know, if everything's stopped. But what I would always advise my clients is, like, no matter what, you know, and also to your point there, like, if there's no cash flow, then the business can't survive. You know, it can't pay the wages, it can't pay the rent, it can't pay the suppliers, which is really why the cash flow is so important overall.
Yeah, it really is. And for anyone who is in that lovely position that does have cash sitting on their balance sheet, and it is more than 6 months worth of salaries or worth of what you know that's coming up in the next while, you pay tax on everything. But you can, I mentioned earlier, look at that fund I showed you. You can invest company proceeds. If you pay yourself, you are subject to tax, PRSI and USC. If you leave money on deposit, you're subject to DIRT tax at 33%. If you sell assets, you're subject to, hopefully, capital gains tax at 33%. If you invest company money in a corporate savings plan or in corporate investment savings plan, the tax is the lowest you will actually get. It's on the profit and it's only 25%. It's the company money. If you need it in 5 years, 10 years, 15 years, 20 years, it's getting compounding returns at the lowest tax level available on the market.
Yeah, that's amazing. And I just picked up something you said there then, you know, like, a client came to me there last week, and, you know, they actually have, you know, some cash on the balance sheet, and they were talking about, you know, options, and they'd been talking, you know, the way they talk to people, and they kind of had heard that, you know, potentially, if I want to buy property, for example, like an investment property, do I have to take the money out of the business, actually pay the, you know, the income tax rates? It could be 52% on salaries to extract the money, and use that, you know, net of tax money then to go off and buy a property? Or could the business buy a property, you know, or it needn't be property, it could be just, you know, an investment,
Yeah.
open-ended. I thought that was a really good question because it's not something that's kind of widely talked about, Anya, but there's I mean, there's a massive tax angle there if you could do it the right way, really, isn't there?
Yeah, yeah, and you definitely need kind of financial advice. It's not always advisable to buy a property through a business because essentially you're getting a double taxation on it, as you said. There is the potential for the income tax relief, and then on disposal of the property, there's also capital gains tax relief. So people think that they're going to miss out on one or the other. It's not always the case. So you need proper tax advice on buying a property within a company structure. But you also need proper financial advice as well, whether it's the right thing to do for the business or not.
Yeah, exactly. And sometimes if that is happening, the company structure needs to be reviewed as well. So you really are talking about that detailed kind of tax piece on the personal and the business side. So definitely, you know, I always say the answer is it depends on the circumstances of
Yeah.
the individual and the business, but there's options there. So definitely reach out, I would say, to your accountant, tax advisor, or financial planner, whatever that might be, and they'll give you a steer. I was just thinking also then, we talked about it earlier, like, you know, if we can minimize the tax, then, you know, we can do, you know, we'll have more money in the bank account, and we're not giving over a needless tax to, for example, revenue. And often then my clients would come to me and ask me how do I, minimize my tax bill. Um, and often it can be as simple really as claiming all the expenses you can, so just day to day, keeping those invoices, keeping those receipts, and actually just on the basis that they're obviously they're legitimate business expenses.
Yeah.
Um, Clients would often turn up with, a credit card slip, to prove an expense. And I would always have to remind them, that just proves you paid some money to someone. It doesn't prove that it's a business expense. So,
Yeah.
if you are in a shop, they might just give you the credit card slip. That's no good. You might as well just throw it in the bin. Ask for a receipt, ask for an invoice, and they're what you use to claim. We would always advise our clients as well to use accounting software. It's really is key, because what I love about accounting software now versus way back is, you can store copies of your documentation on the software, your invoices or your receipts or whatever. You don't have to keep the hard copy stuff anymore. You don't need a big drawer. It's brilliant. And for us as accountants, then we're doing a set of accounts. It could be management accounts, it could be year-end accounts, whatever. We're no longer then asking our clients for copies of things. It's all there if you want it. And that includes if revenue did ever want to do a review of your expenses as well. It's all there. So there's nothing that should be lacking, I would say, in that regard.
No, and even for someone like if they do have a side hustle on the side, because I get this a lot, when do I need to declare it? Technically, you need to declare all earned income to revenue. But if you even set up a Gmail account, Anya Cullen Limited tax returns at gmail.ie, I'm out, I have a business expense, I take a photo of my receipt, I email it to that account. I have a home that's like that. If I don't, or I'm not at the stage of having an accounting package, it's all in one place. My accountant asks me, so Tom comes back and goes, Anya, have you got your business receipts? No problem. They're all there. They're all documented. And it's a very easy way, both from your business tax return, but also don't forget, like personal tax returns. You can go back 4 years. There's 20% tax return on things like health expenses, non-routine dental expenses. One of the big things that I'd say, particularly to younger people that I meet along the way, is invest in yourself. Get the extra course, get the extra qualification. That's going to be more important than you putting €100 into a pension at 25. Because if you can go from a diploma up to a degree, up to a master's, you're proving to the next employer again that your wealth, your worth, or you can charge more for your services, which in the long run is far more beneficial than not having kind of improved your own. So you can invest in yourself, invest in your business, and also don't be afraid at some stage when you kind of go, I need external help. I need to take on a CFO. I need to take on a marketing consultant. I need to take on an additional level of expertise, because delegation is one of the best ways you can also grow your business.
Yeah, absolutely. I was thinking, you got me really thinking about myself here when you started talking about investing in yourself. So I definitely have a takeaway for today.
There you go. Yeah. But
For sure.
it's one of
Yeah.
the easiest ways, like even in terms of you're a sole trader. Also, like don't be afraid to ask. Get yourself set up on something like a Trustpilot review. Ask clients for referrals. It's one of the easiest ways to generate additional business.
It is, yeah, like referrals, it's gold, because you already have a leg up at that point. No, it's brilliant. I was also thinking then kind of separately about company cars a little
Yeah.
bit, and the benefit in kind piece, and probably overall the benefit in kind piece as well. So we're kind of pivoting a little bit here, because sometimes we get asked a question from our clients, should I buy the car personally, or should I buy the car through the company?
Yeah.
So the company foots the bill. But just I suppose to pull back a bit, then like in relation to benefit in kind, like that's something that happens when a director or employee say gets what they call a non-cash benefit from your employer. You know, like, so that's where your employer could pay for accommodation, entertainment, for the company car, so on. But where there is that non-cash benefit, it's the directors or employees and could be taxed on the kind of the personal benefit that they get from their employer.
Yeah,
So you have the company car, but you might use it in the evening or the weekends, or you might have the company car, but you don't have another car. That's often the kind of almost litmus test with revenues. Like, well, when you have one car, I must be using it personally. That's okay, that's fine. But there's a little bit benefit in kind to bear in mind then.
yeah.
You're saving on the depreciation, you're saving on the loan repayments, the car service and tax insurance and so on. I suppose where I was going with this was, yeah, should I buy the car personally or should the company foot the bill? You know, often, you know, it depends again on the scenario. Am I buying is it an older car? Is it a newer car? Because often that can be the differentiator. If it's a newer car, which would often be the case anyway, it would, in my view, would make sense to buy it, let the company buy the car, and let the company pay all the expenses. Strategically, if there's an older car, which you know which is might be a 5-year-old car, which might be depreciated, it mightn't have a big loan, it might only have a small loan on it. It could strategically be a way of getting money out of the company through your mileage, your travel costs, etc., which are tax free. So bear that in mind. And the key point there probably as well, if you are doing business trips in your personal car, you can claim potentially tax-free mileage from your business as well. So do bear that in mind. That's something that's often overlooked. If you're on the road as well for periods of time, you know, there's subsistence you can claim as well for physically for being away from the office, again, tax-free. There's rules around it, but I suppose for the purpose of this webinar, it's an awareness, I think, and definitely check with your accountant to make sure you are claiming those kind of expenses as well.
Yeah, I would. And I know we're kind of coming up on time here, but the other
Mm,
thing I would say is also if you've never reached out to your local enterprise offices, they are fantastic if you're trying to scale up, if you're trying to go more online on digital, if you're trying to kind of scale outside of Ireland. Don't forget there like from an education point of view, there are loads of external resources that are also available to you that maybe we can advise on in a like a financial consultation, or
yeah.
Canor can kind of guide you towards. I'd also kind of reiterate in terms of Canor, you have a fantastic website with webinars, you've blogs. There's lots of free information both on our website, on Canor's website, that once you're kind of the more educated you are, the better the questions are, the more you're going to get out of a consultation.
Yeah, absolutely. Now, we have a couple of questions in, so
Brilliant.
I'm sorry. I hope I can take a couple of minutes here because it's fascinating listening to your discussion. Louis has said, do I have to receive a salary to put money in a pension fund? And is there any connection between the salary amount and maximum amount of money we can put in a pension fund?
So again, Leo, I need to know what kind of business you're running. If you're a limited liability company,
Okay.
or if you're a sole trader. If you're a sole trader, you obviously have to be paying yourself, to be able to pension fund. Revenue do kind of look bad. They don't look positively on if you are not paying yourself at all, and there are large company pension contributions coming out. It is kind of contentious along, well, what
Yeah.
is a decent salary, but we'd be saying you need to meet at least €1,000 a month, kind of 12 grand a year to be able to properly
Mm.
feed a pension and not for revenue to start kind of seeing red flags.
Yeah, because I mean, we'd often see that actually, and you're
Yeah.
absolutely right on it. Like, so, like, what are your outgoings? Okay, how are you
Mm.
covering them? So, if let's say your outgoings are 2 grand a month, like between pensions and everything else, but you're only drawing 1,000. Okay, where's the other 1,000 coming from? And I would say just make sure that you're covering your outgoings and you're not leaving yourself short. Pension comes second. It must come second after that basic. But yeah, that's just what I would see day to day anyway.
Louis sent in some follow-up information. I'm already contributing the maximum possible for a pension fund from my first work. Can I still put more money in a pension fund paid by my company? The other contributions for my pension fund do not have any relation with my company.
Okay, so you should only be feeding one pension at any given time. if you have only one salary source. You can't be feeding an old paid up pension and a current employer pension. So you just need to be careful here. If you, well done on max funding the pension, that's great. Again, that's your kind of personal contributions would be my understanding of that. So again, age-related limits, you'll get your 20 or 40%, but there may also be employer contributions that you can also kind of increase the level of funding that's there. If you want to send me a private email and even kind of attach kind of a little bit more information on what you're doing, I'll come back to you on that one.
Great, thank you for that, Anya. So Louis, you can reach out. I've shared Anya's contact details in the
Thank you.
chat function there as well. We also have a question from Danny here. I currently pay for my own private medical insurance at around 170 a month as a director of a limited company. With only one employee, should I be making payments through the company?
So again, this is a bit like the income protection. You can do kind of death and service. This is a deductible expense, but there is a benefit in kind because it's a personal medical insurance company. So yes, you can put it through the company. Just be aware there is a benefit in kind on it. And then in terms of kind of other protections as well, Danny, you can, as a limited company owner, do the likes of income protection. Again, that's going to maintain those premiums. Or if you are married, have dependents, also consider a death and service benefit. So you can get up to 4 times your salary out of a company tax-free. If you want to go with more, let's say you do $1 million, you're on 100 grand, 400 grand comes out tax-free. There's still 600 grand in what's called an approved retirement fund for your dependents should you pass away, that will replace your income coming into the household. So lots of really nice protection options that you can do as a limited company director.
That's the key takeaway that I took from this, Anya, that it's so important for business owners, even at an early stage of their business, and even as sole traders, to protect their income.
Oh, it's huge.
It's so important, and I'm sure it's often overlooked. And as you say, it's a tax deductible expense, but it's the biggest way that they can protect themselves and protect their income. So I do hope that all of our attendees today have taken at least will take action in some way by reaching out and getting some advice and direction on that. Because I think that is huge. Interesting the benefit in kind piece that you guys discussed about as well, and the fact that that impacts on, let's say, health insurance. I presume that doesn't impact on the other insurance policies like the income protection or the death
No,
and
there's
service.
none, because you get
None.
tax relief on all the other ones that I have mentioned because they are legitimate business expense.
Yes. Great. Okay. We don't have any other questions through there at the moment, but it was a fantastic discussion, Anya. Particularly love your financial wheel of life. It's always really interesting to see that. And such a great discussion with you both about cash flow. One of the really interesting points that you made, Tom, there was about businesses who believe that, you know, they have to have cash in the bank, or that in some way shows success. And we've had a couple of conversations recently about the quality of your management reporting is what will only show your success of your business, really. And we would often say that that's really important. In our poll today, it was one of those areas that people reported that they wanted support in. And so what we'd say is reach out to us. We can give you direction and give you support. We can do management accounts pack at any stage of the business, that you don't have to wait till your financial year end to get sort of that sense check of what money you have in the business as well. But yes, Anya, thank you so much. Definitely everyone must mark their calendars for that first of the first 25. Get it sorted before then to get any of that cash that you have sitting in the business into a PRSA fund. That was, again, a great takeaway.
Brilliant. Thank you so much, everybody.
Have a lovely day.
Cheers.
Thanks, everyone.
You too.
Bye-bye
See you
now.
Bye
now.
now.
Bye.
Bye.
Bye.